Welcome. You are viewing Get It Now, a feature of Cash Talk Credit Repair Services. In this episode, Cash Talk Credit Repair is pleased to have Rawle Rollocks, Director of Business Development and Sales at Assuage Business Development Limited, alongside Antony DeFreitas, Financial Consultant, as they discuss tips for securing a loan. This live stream is produced by Launchpad Media and begins now.
Hello and welcome everyone to our next episode of Get It Now with Cash Talk Credit Repair. To those of you listening in from YouTube or Facebook, maybe LinkedIn, we are happy that you've joined us. And we do look forward to a very informative discussion with our guests this evening. During this live stream, we delve into issues surrounding personal debt management. In so doing, we aim to empower individuals to take charge of their finances and to be able to achieve financial independence. As was mentioned before, I'm your host, Director, Business Development and Sales at Assuage Business Development Limited. This program is brought to you by Cash Talk Credit Repair Services, a pioneer in local personal credit repair services in the region, actually. In today's stream, Antony DeFreitas, alongside with yours truly, we hope to delve into the topic and look at the steps that are required to successfully secure a loan. So we want to demystify the process and to make it clearer to everyone tuning in as to the important do's and don'ts when approaching a financial institution for loan, or as we discovered in our last podcast, debt financing. So let's get it now with Cash Talk Credit Repair. Hello, good afternoon again. And if you're joining us, welcome to Get It Now with Cash Talk Credit Repair. I'm your host, Rawle Rollocks. And with us today is Mr. Antony DeFreitas. Just to give you a little bit about DeFreitas, he has a very long list of accolades. Mr. DeFreitas is a financial and business process analyst with over 30 years experience in the implementation of customer management and accounting solutions. And of course, every aspect of credit union management, reporting, and governance. He served in the finance division of a very large telecom provider for over 31 years, having developed a range of solutions for financial and management information reporting. All right. He has also been in the cooperative movement for the past 30 years and served on the board of a credit union for the past, actually since 2015, if I get that right, where he also serves as the treasurer. He also serves as the chair of the audit committee on the Trinidad and Tobago Credit Union Deposit Insurance Cooperative Society Limited. This organization provides deposit insurance protection for member credit unions to protect their member investments. As a consultant, he works with small to medium-sized enterprises to improve their management reporting and conducts various staff training exercises, as well as to help them drive process improvement, documentation, and the recruitment of talent and at the management level. So you see, we have a very esteemed and able guest with us. So good evening, Mr. Antony DeFreitas, and welcome.
Thank you very much, Rawle. I am very humbled by your accolades. Thank you very much. And I'm very glad to be here. Really, really glad to be here and to share and to also learn from those that we attempt to help.
Yes,
right? But basically, this whole issue around credit and borrowing is something that is a bit of a gray area for many people in our society.
Yes.
A lot of people have a lot of fear and trepidation in terms of approaching financial institutions for loans. And I mean, I know a few friends of mine who over the years have said, I ain't borrowing no money from nobody. I want to do everything myself. So we'll go into all that,
Yes, excellent. But what got you passionate about this particular area? I mean, you have, wide quite a number of areas that you specialize in. What brought about the passion for this particular area of helping persons in securing loans and financing and the cooperative movement?
Right. And basically what fueled my passion was really my own experience and my take on the experiences that I have had. I distinctly remember one of my early experiences as a young fella, going to my credit union. Now, I was one of those people who believe that, hey, everything I go into my credit union first. I ain't going to the banks. The banks are vultures and blah, blah, blah. And the first thing I did when I wanted to buy a piece of land, I saw a piece of land, I paid a down payment because I know I was going to get a loan somehow or the other. I made the down payment, and after I made the down payment, I went to my credit union. The problem with the credit union was their policy was you could lend you up to 2 times your shares. At the time,
Right.
let's say it was 100,000 I wanted to borrow, I had 35,000. So they called me before the credit committee. Five of them, a man sit down pulling on a Broadway. Broadway is a very harsh cigarette. So I
Yes.
had to stomach that as a non-smoker. And my boy sit down and he puff and he says, so DeFreitas, where want this land for? I say, well, to build my home. So he say, but you're short on your shares. You had to be hard 50,000. So I had no problem building up the shares. I build up my shares but I want to give all of the business first because I know if I take my loan from all you, I'll get a dividend too. So you come like a
Yes.
borrowing for myself. He say, well, I
Yes.
like how you're talking, but where this land is? So I tell him where the land was. When I tell him where the land was, now this is in Mount Lambert. Mount Lambert is a beautiful residential area right next to Bermudas, between Bermudas and Carib in San Juan, right? And when I tell him Mount Lambert, he don't know Mount Lambert. He from Gonzales. So hear him. Where? Mount Lambert? So when the other fellas tell him, that's a nice little place, so. He say, oh, well, here what? It's better you lose a deposit than the freighters because I
Ah,
ain't think that's a good loan. That's what he tell me, eh? You know what happened next
wow,
day?
wow.
I take my little bundle of paper. I went by a bank through the lending agency, and within 3 weeks, I had my check to do what I had to do.
Wow, wow,
So
wow.
that experience, it create a passion. I was able to frame so much from that experience because I was
Yes,
working for a decent company. I was working for telco at the time. I had a decent salary, and I was able to afford it in my mind.
yes.
My DSR was about 15%. So I had
And
all the
you'll have to break
capacity to
that
do it.
down for us, right? You said your DSR for those listening in.
Right. Yes. So DSR is the debt service ratio, right? And what that means is it's there are many different ways in which DSR is collated and assessed, but it really speaks to the capacity that anyone has to borrow, right? So what it speaks to is your loan load on your income. So if you let's say I give us an easy example, income is $10,000. If your total loans servicing total, let's say total loans is about $3,000, it means your DSR is 30%. That's the easiest way now. A lot of institutions have very more complex ways of doing it. Some of them say you exclude mortgage, and that's nonsense. The best way to calculate DSR is the way that the banks use it, which is total income. You look at total income and you look at the total loan payments,
Loan
including credit
payment.
card. Yeah,
Yes,
including credit card. Any loan you have, if you borrow money from a loan shark or a payday, or you take a payday loan, a lot of people don't know about that, but people my age and older
yes,
would know about loan sharks, right? In front telco, used to have a little fella used to come and hunging down people for money every week because they would take that money to help to run the second and the third families. So
yes, yes.
nevertheless, any
The
loans
by
you
the way
have,
bankers, we know them.
correct. So and the interest is very high, but they don't make
Yes,
it seem so. They just come and collect the money
yes,
weekly or fortnightly or monthly, and the payments look low. But when you add it up, and watch where these fellas live in, is huge
yes,
houses they
yes,
used to build. So
yes.
anyway, the DSR is really a total loan payments divided by your total income. So if your total loan payments is 2,500 a month, and your and your income is 10,000, you have a 25% DSR, right? Now, many institutions have a level of tolerance as to how much DSR they tolerate to say the loan is good. And that is dependent on a number of factors, but we'll go into it a little more in depth later on.
So let's back up a little bit, and thank you for sharing. I always find it's important to connect with the why. When we connect with our presenters, why they're here to share. And
Yeah,
as you've shared, you've had personal experience, and a
yeah,
pretty negative experience to boot. And I'm sure
correct.
many persons tuning in can identify with these sort of experiences. But to back up a little bit, right? Why do we need a loan, Anthony? Right? Why should one consider a loan? There's
That's
a
an
saying that
excellent,
you should
yeah,
just, live within your means. If you can't
yeah,
afford it, don't worry about it.
yes,
Or if you can't save towards it, just forget about it and don't let it be a reality. Do not take
yeah.
a loan. Why should one take a loan?
Right. Now, that's an excellent question. That's a fundamental question to the whole concept of credit and personal financial management, right? And I'll start off by giving a short story about someone building a home, right? I have a friend, he left school same time with me, but he didn't go into the normal working for a monthly salary kind of thing. He was an entrepreneur. And so his salary would go from 1 month, it could be $1,000, next month it could be 5,000, then 3,000, then zero, right? So he couldn't satisfy anybody to say, look, I have income of X amount, so I could service a loan. So he had to do it different. So what he did, when he put aside in those days $20,000, that's his foundation and floor slab for the house,
Okay.
right? So you go buy his land first. Then he will go on let's say, a 5-year journey of building his home. And over that 5 years, he would have amassed income of, let's say, 300,000, and he would have spent about 200,000 over that time to build his home. And he ended up being very well off because
Yes.
while he was doing that, he was also investing in multiple sources of income. So in 3 months' time, he had his foundation and floor slab up. That was a significant cost. So at that time, that would be, let's say, it was about 65,000. Then he would have put up his walls. Then he'd have bring somebody to do the electrical, break up the wall, put on all the piping and all the conduit and the lines and whatnot, decide where the switches are and so on, run the washer lines and so on, and telephony and whatnot. And then, so by time 7 or 8 months passed, he had the whole frame of the house up. And in a
Wow.
matter of probably, I would say about 18 months, he had a nice upstairs and downstairs house built for a total of
Wow.
about 350,000. But that was perfect for him because he was a businessman. So when he
Right.
invests money, he was bringing in goods and selling. So he would invest 20,000 in a shipment or probably 30, 40,000 with a consortium. And by the time those goods start moving, he gained commitments from the people who buy any goods wholesale and, the
Yes. Yes.
warehouses and
Yes.
so on.
Yes.
So he
Yes.
was just amassing his money, putting some in the credit union, putting some in the bank, servicing a loan for the car, and building his home. So that was perfect for him. But at the end of 5 years, when he looked at his finances, he hold his head and ball. And he said, because now I have a house, and a house, people is called a house an asset, and in strict accounting sense, a house an asset. But the economic view of a house is not really an asset. House
Yes.
and car is really, from an economic standpoint, are liabilities. All they do is
Yes.
draw down on your finances if you don't have the systems in place to support the lifestyle that come with those things, right? But
Yes.
nevertheless, when he looked at his finances, he realized that a house worth, the valuation was $500,000. And he's like, boy, I'm rich, $500,000. But when you look at his savings, he only had $30,000 in savings. And that's when he hold his head and ball. And his financial
Right.
analyst, he shared with me that his personal financial planner, he had a fella like Rawle that was helping him. Who knows, it might be Rawle and all,
Uh,
right? But the financial planner told him, here what you should have done. When the planner put everything down on paper for me, show him, look, you were making $140,000 a year in income. What you should have done is secure a loan. If you had secured a loan, you would have serviced out of that 283, 420, or have $420,000 you make in 3 years, you could actually save about 100,000. And in them days, you know, us was paying 8 and 10%. So your money
Yes.
would be, you'd have about $300,000 saved and have your home. The only difference is you would have a loan. You'd have a mortgage. In those
Yes.
years, 10-year and 12 and 15-year mortgages were normal, right? And you'd
Yes.
have a 15-year mortgage. So you'd still be drawing down on a mortgage. But granted that you're getting your income is not a problem, because that way, and this is one of the first things we have to look at is a way, and this is a textbook answer to the question. When you borrow and save at the same time, it allows you, if you do it right, to build equity. Right now, one of the
Okay.
problems in this country of Trinidad and Tobago and most of the developing world is that we have been handed a short deck of cards. I always say this: the imperialists have plundered our countries and create havens for us to come and visit and say, oh, look how nice London is. Look how beautiful Paris is. Most of us don't know that those countries were built on the backs of Africans, Asians, and many other people around the world. Right? So at the end of the day, that's right.
Yes, we're hearing you.
Yeah, so at the end of the day, yeah, so at the end of the day, we have been dealt a short hand, and many of us have developed lifestyles to follow the people in the Western world living on debt. So we here in Trinidad, a lot of us, probably about, I would say about 40% of our population, live just like Americans. We live on credit and so on. And the problem we have is that we don't build equity. We don't build ownership,
Yes.
right? And we always say about the
I'm listening
1%
to
and
you,
the
and
0.1%.
yeah. But one of these
Hmm.
things I'm listening, I'm hearing someone, one of our viewers saying, well, yes, you spoke about the businessman, you spoke about the person who has that capacity. But there are many persons who, because the nature of their income, they don't have that, they have very low incomes. So the whole question of saving and so forth may not really be, so in that situation, is it that persons like that are prone to take loans, and loans is really the way for them to be able to acquire assets? Mr. DeFreitas, are you here with us? Yes, well, it seems like Mr. We have a connection problem here. So maybe you're tuning in and you've heard the discussion so far. What would be your take on it? When it comes to being able to access loans, do you think, what's your opinion? Maybe you can um put in the comment section your thoughts on, should we really get a loan in the first place? But while we wait for panelist Mr. DeFreitas to rejoin our session, we're gonna jump into a special cash talk feature. So, getting ready to purchase your first home, you need to have money saved for your down payment, no doubt. The amount you need will depend on the lender and the type of loan you choose. Lenders prefer to have a down payment of about 20%, but you can get away with just 3% of the purchase price if you have good credit. Good credit, that is. For credit advisory services, do contact Cash Talk Credit Repair Services today at 752 cash. That's 752 cash. So definitely reach out to Cash Talk to see if there are ways in which you can more easily manage your down payment challenges. So thank you very much there to Cash Talk. So Mr. DeFreitas, you're back with us.
Yes.
Yes. So the question really, came to Mr. DeFreitas, you mentioned you were talking about persons who have that income, who are business persons, but there are many individuals who have very low income and average to low incomes. And is it that in their situation, you would advise that a loan is the way to go, or should they just live within their means? And that's the question we're really trying to. How can a loan be beneficial, to the average individual out there?
Yes, excellent question. And the thing is this, um, given what I was talking about before, about us being dealt a shorthand and all that is history. But that's just to give context of how much catching up we as a people have to
Have
do.
to,
So
yes.
one of the things we have to do, there's no getting away from it, right? One of the important aspects of anything in life is that concept of intentionality. Intentionality in terms of having a vision, deciding what you want. Make sure what you want is reasonable, right? Make sure what you want is reasonable. But look, look high. Try to jump high. But I mean, there are people who say, don't hang your hat where you can't reach, right? But at the same time, within your means, there are certain phases of development in life. So it must start with a vision, and you must always write your vision down on paper. Well, of course, we have tools now. We could do a vision board online, post it as your screensaver. Let me tell you something. A friend called me earlier. He said, Tony, boy, I'm so thankful that I spoke to you. He had a problem, a serious plumbing problem where he was living. He had a tenant, like 6 apartments, and he trying to get a man who he believe in to come and fix the plumbing for him. Serious thing. We're talking about sewer backing up and some drainage thing in the back and breaching the foundation. And he called a plumber and a mason, and he couldn't get either of them. And I told him, I said, listen, put a vision board, hold up these people in your mind's eye and see them coming to you and doing the work. And people laugh at that, but I'm telling you, it does work. It does work.
Yes,
He held
yes,
up that vision. He wrote down all the things he wanted done, not how to do it. He don't know. He has no expertise in these things. All he know, the water was backing up. The neighbor calling because the water backing up in the yard and water running down somewhere in the foundation of his home and blah, blah, blah. He does write down, I want this done, I want that done, I want that done by so and so time, right? And you wouldn't believe this man, these two people were the busiest people in Trinidad. They called him within
yes.
a week's time and this came and started to do the work, right?
So,
So
so
that's
is
the
it?
first step.
Well, the thing is, we do have just about 5 minutes or so, so we're gonna have to fast track to make sure we get everything in. So,
Yeah,
can I take it that you're saying then, therefore, that being intentional when it regards to what you're trying to achieve and accomplish in life is very important, and
very
in that
important.
regard, accessing a loan can work if you approach it with that kind of intentionality.
Correct. But there's also in life, we have to be patient. We always have to exercise patience, tolerance, and so on. So the point is this. If you know your salary is $3,000 a month, don't try to live on 8,000 a month by taking a credit card and using it for 3 months. Don't do that. So there are certain things we must do. There must be a period of sacrifice where you have to save. You must go on a rigorous, serious saving binge. It
Yes,
means cutting back on expenditure, cutting all the things that you don't need. We spoke about these things in the vision work sessions last year, right? So people need to curb expenditure seriously, especially in this period we is what the people, my friends, some sort call it banga season, right?
yes.
As a serious thing for a lot of people. So cut
Mhm.
back on expenditure, curb the type of lifestyle, right? You don't have to eat steak and all them fancy thing. Cut back, make sacrifices. That's how people did it long time. Save the money.
Yes.
Save the money for your down payment. But you have to ask the questions. You have to pick up the phone, call the bank, call the credit union, compare, contrast, look at the options that are available and get the one that is best suited to you, right? And of
One wanted
course, I
wanted
yeah,
I wanted to interject, because I know one of the things that persons are often confused about is this whole issue of how loans work. Is there anything that you can share, just two pointers really, in terms of understanding? So, for example, I go to a facility and they're telling me, yes, you can get this with only 5%. All right. But that's all the
Right.
information I have. I don't know how that 5%
Right.
is working. Is it daily? Is it monthly? Is it, So, is there
Right.
anything you can give the viewers so they can understand in making those choices when it comes to the rates that they're being told?
Right. And that is something that's an excellent question, because we have a lot of people, a lot of institutions that advertise and they tell you long time the banks used to say, we have a lower rate than the credit union, because most credit unions 10 and 15 years ago used to charge 12%, which is 1% on reducing balance monthly, right? And they would give you a loan for up to 10 years.
What does
The
that mean?
banks
Could
would,
you share very quickly when you say
yeah,
1% on the reducing
that is
balance
that
so our
is what
viewers
we
can
call
understand?
12% is the amortized or the annualized rate, but it really means 1% in reducing balance monthly. What the banks would say is, we give you a better rate than that. We're giving you 8. But the 8% 15 years ago the bank was offering was really 14% compared to the credit union. So my advice to anybody is, anybody promise you the moon and the stars, tell them put it in writing. Right? So
Yes, yes,
give me a schedule showing me what my payments would be if I take a 5-year, 10-year, 15-year mortgage, and carry that to the credit union and ask the credit union for a quote on the same amount and find out what
okay.
the stipulations are, you know?
And this is where the compare and contrast will come in. Will
Correct,
come in.
correct. And one
Yeah.
of the things I always tell people, try your best as far as possible to do your borrowing from a credit union. A reason being, credit unions in this country are now seen as a lender of last resort for 50% of
Yes.
credit union members. They are the older members who use the credit union first, but the younger ones treat it as a lender of last resort. That is not good, because by the time you go into credit union, you have less borrowing power, less ability to pay, and you end up getting in a jam. So my thing is,
Yes.
go to the credit union and always compare. But remember, when you save in a credit union and you borrow, you're really borrowing from yourself, right? So a lot of times the credit union rates now, what the banks have been doing, they're also suffering. Credit unions, banks, all financial institutions are getting much less loans because of the economic realities. But the banks, what they are doing is dropping their rates of interest. But what credit union members have to realize is, the bank might give you a rate that is half the credit union rate in loans, but
Yes.
the credit union pays you a dividend on your savings. So what you
Yes.
really should be looking for is that differential between what you're paying on your loan against what you're getting
What
on
you're
your
getting back
savings. You see?
in the dividends.
Yeah, what the
Yes.
banks really push for, they don't care about nobody, What they really care for, the bankers are hungry animal. So what they do,
Yes.
they're voracious. They have a big appetite. So what they would do is lend, 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 lend. They don't care about you saving. And if you want to save with them, you're going to get 0.5% for the year, max,
Yes.
as
So,
opposed to
so,
a credit union.
so in essence, you're saying that even though the rate stated may seem lower, all right, because of the dividends that you're getting, on the higher interest rate, let's say in a credit union, it can work out to be better in terms of its
Correct.
impact on a monthly basis in terms of what you pay out.
Correct. Correct. So
Okay,
what you ought to do
that's
is, when you're making
valuable.
your analysis, look at how much you have saved. You might have $50,000 saved in a credit union, and you're getting 5% of that. That's $2,500 a year, and you might be paying 5,000 interest for the year. So if
Yes,
you minus
yes,
that 2,500 interest on the dividend from the 5,000 shares, your effective payment going out of your cash flow
yes,
is really 2,500. You see?
yes,
So a lot of people
yes.
don't really understand those things, but it's something that you need to understand.
Yes. So I see one of those persons tuning in, Simone Nickham, is indicating that this is a simple but serious and effective takeaway, that you're sharing here to prepare those persons who want to secure a loan, observe a period of saving, cut back on your expenses, and compare and contrast. So thank you very much for that comment, Simone. Before we go, there's one thing you mentioned with regard to debt service ratio. Could you just take a couple seconds to explain the importance of that? And if I'm approaching the institution, how do I manage this issue of my debt service ratio? I know some people would say, listen, you don't tell them certain things, you hide certain information so that the debt service ratio would look a little better. What would be
Yeah.
your advice? Yeah.
Yeah, my advice is always to be honest, because now most financial institutions have access to something like it's called TransUnion, and TransUnion is a financial management company. They have big data in terms of um, loan payments, even credit card behavior. So be as truthful as possible and always try to keep a good character with your credit union and the various, even if you borrow from the bank, keep a good character with them. Show them that you're trying your best. If you're in a jam, call and talk to somebody. You'll be surprised how much help you could access. Right? They might either put you under somebody
Yes.
like the credit management people and so on, to give you advice, or the credit committee of a credit union is an excellent
Yes.
resource. I'm a treasurer of a credit union. I give members financial advice for no, I don't charge anything because,
Yes. Yes.
everybody wins when
You're
you do
hearing
that.
that, viewers. You're hearing that, viewers. So certainly, you wanna get on, keep in touch with us. You'll find a way of getting on to Mr. DeFreitas for more assistance and help. But Mr. DeFreitas, as we wrap up, I just want to give you the opportunity to just share your last three tips. We've learned quite a lot in this session today about being intentional, having a plan. Watching how you save, curbing your habits. Thinking about how you can save as well, along with your loan situation when you go to the credit union. So we see the advantage there. But anything that you'd like to share, just in summary form, as we wrap up this evening session?
Yes, definitely. One of the main no, I wanna talk about the main what I trying to impart here is proper personal financial management. And you can't manage your finances if you don't understand. So my advice to anybody is learn. I had to learn by force. I had to
Yes.
learn by force because I realized it was a matter of my buying power. When I build a home, is I have to live in it, right? So I always make sure to educate myself. Google, instead, people say into Google all kind of conspiracy theories and thing. Google things about financial management, different types of interest rates. Look up what is amortized as opposed to add-on interest. Those are the terms we use in Trinidad, right? But the
Yes.
thing is, look up compound interest, look up
Simple
annualized interest
interest.
rate,
Yes.
and the
Yes.
difference between annualized and amortized and add-on interest. Because the easiest way to figure it out is like this: if somebody tell you, anytime somebody offers you something, ask them, what's the add-on rate? So, for example, tell them if I borrow 100,000 and I taken 10 years to pay, what is my loan payment going to be? And they go do, they go work it out in the system and shoot out a number here. Write it down. 100,000, it will cost me 3,000 a month for 10 years. Work out how much interest you'll be paying back, right? And one of the important things I'd like to leave our viewers with today is that when you're borrowing, right, try to find out about the terms for settlement ahead of time. Because before, the banks, 10 years ago, the banks used to penalize you. Sometimes they will charge you an extra two payments if you pay before time.
If you pay
They
early,
wanted you to
yes.
keep to the schedule and give them the guaranteed income. But now they have been letting up on that because obvious reasons, competition from the credit unions and so on, right? But find out from them what are the exit terms. If I borrow 100,000 and I pay off 20,000, I want to pay off one shot the 80,000. What would it cost me, right? Now
Yes.
I can tell you,
Yes.
I had a wonderful experience with Finco. I had my mortgage with Finco. It was sent over to Republic, and when I wanted to settle, they were so nice because I was nice. I was honest with them. I came to them and said,
You were
listen,
upfront.
yeah, I was
Yes.
upfront. I
And
come
you
and say,
paid
you
on
know what?
time, no doubt.
Yeah, their policy was to charge you 3 months interest if you're settling the loan before time, right? And
Yes.
I still had
Yes.
about 5 years to go on my mortgage when I settled, and I call them and I say, here what? I'm leaving my job within the next 3 months. I'd like to find out what is the settlement amount. And they were so happy. What they said? They said, you are a rarity. And because of that, they charged me zero. I just paid them the
Uh,
normal increments of the installments, and that was it. Off the hook.
Thank you. Thank you
Yeah.
so much. Well, you see, you're hearing it, folks. We have a rarity here today who has shared so many gems with us in terms of how do we approach this issue of securing a loan and the various tips. So you want to make sure and keep 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 in touch with the what we have coming up. You're going to hear lots more from individuals like Mr. DeFreitas who are here to share tips that can help you. So, Mr. DeFreitas, Anthony, thank you very much for being
You're
with
most
us.
welcome.
Right?
Most welcome.
Do remember that this session today was brought to you by Cash Talk Credit Repair, a pioneer in regional credit repair services and in the Caribbean. We're also thankful for our producer, LSC Publications. So, to be kept in the loop about our upcoming podcasts and more about the services offered by Cash Talk, check us on YouTube, Facebook. Please like and share. So, thank you so much for being a part of our discussion and tuning in. Until next time, mind your own business. Thank you.
Good night, friends.